two questions on that really quick. It's just one, any particular reason or any particular benefit for moving into the fund space versus the single family space? And the second one would be, what are some new things you have to learn to make that transition? And
Yeah.
how should someone go about that?
So over the years, used around 19 million, and mostly from individual private lenders, on occasion equity partners, to do the deals we've done, the 200 or so single families, and there was a small apartment complex that I did early on in my career, and then a couple smaller multifamily like duplexes too, and then the 384 unit that I JV'd on. I'm a small partner in that. That we did last year. So there's that. Now moving into, ultimately just wanted to scale, and the original thought was, we're going to scale single family, and it has some extra unique challenges outside of just ridiculously low inventory, which multifamily has that too. But with single family scaling that business, I think would have been a lot easier back in the 2015, 2018 time period. In the time I was going through this process, which is really 2020, 2021, I'm starting to explore it more. I'm following folks that I know from masterminds and just friends I've met along the way who have moved into mobile home parks or self-storage units or multifamily and commercial and land development. So I've followed them. I've seen what they've been doing, had conversations with them. And then when one of those folks, mentioned the Lake Forest deal in Daytona Beach, Florida, it was just right timing. So I had a couple of things. I had been doing my homework during this whole time while still running the single family business and thinking like, hey, how can I add more value? Now I'm doing less deals because I'm trying to hold more single families. And now all my private lenders, they're saying, hey, I've got money, like, when can you put it to work? I'm like, well, I'm just not buying as many houses. And so when that deal became available, I pitched it to some of them. I was like, hey, this looks really good. What do you think about it? And they had questions, and a couple of them got in, and even the ones that didn't, they were just like, not right now, but they were always like, hey, how's it going? How's it going? How's it going? And I knew that would happen. And at that point, we started looking into like, hey, if we wanted to scale this, like, what would it look like? And I wanted to make sure that I could build something that can grow with the overall vision. So if I bring it back to a CRM, early in my real estate investing career, how to get a CRM. Everyone was using Podio. I went and looked at Podio, hated it. Absolutely hated it. It's a lot different now than it was back then, but I was like, this thing's a piece of crap even if you pay for it. A lot of people use the free version and like, this is just horrible. And ultimately I narrowed it down, like, if you want to grow, you need to get a nice platform that you can grow into. Salesforce and Zoho. I ultimately chose Zoho, even though they're both similar, and I still use it to this day. It's been hugely powerful for everything that we've done, from tracking leads to conversions to reporting. I can go in there and pick a private lender and see every single transaction that lender has given us, and track all the interest payments paid. And it's phenomenal. So same thing with the fund. They're like, most folks in the multifamily space, they're doing just syndications. They're one-off, investment vehicles. Bring investors on, do the deal, they wind up the deal, exit, pay the investors back. And it's an ongoing process, and it's very effective. But my experience working with investors, a lot of them, they just did not want their money back. Not all of them, but there's a lot of them. It's either IRA money, or they just don't necessarily need it. They just want a monthly check, quarterly check, an annual check. Other than that, they just want you to keep it growing. And that type of setup just wasn't available, if I started a traditional syndication. So that's why we went with the fund model, to build something long-term and sustainable. That's why I put the $100 million tag on it. It doesn't mean I have $100 million. That's going to take time to raise. And it's okay if it takes 10 years. I'm not really worried about it. I think we can fill it much faster than that. But ultimately, I had to look at the multifamily space and say, how can I create the most value? Do I want to go compete with folks who have better relationships with brokers and they've been building those relationships for the last 10 years and try to get better deals? Do I want to be a property manager? Do I want to be an asset manager? Do I want to be an overall operations manager? Do I want to be a capital raiser? And ultimately, it seemed with my skill set and track record with money raising and doing the deals before, the best value that we could provide high quality operators was capital, raising capital. Same thing with our investors. I mean, had the track record, perfect track record with fundraising and working with investors. So it was, how can we solve problems for investors, getting them high quality, risk adjusted returns with options and benefits that they don't see normally in the marketplace. And then for experienced operators, how can we solve their problem of not necessarily having to raise money or being able to confidently get better deals because they already have a check that they can write. They don't have to syndicate. So that's ultimately how we came across the invested equity housing fund.